Hey there, Kenya Costa here with Prime Lending.
And Mallory Setzer with Big Block Realty.
So all the videos we have done so far is educating about mortgage and what are the steps to take to obtain one. But in this video, we'll tell you things that you can do to most likely ruin your chances of getting a mortgage and that house that you really desire. So let's start with our number one. Quit your job after you started the home loan process or change from an employer to self-employed. If you quit your job, lenders no longer can count that income because it just won't continue unless you are getting a better job. But it's never a good idea to change jobs during the loan process. And if you quit your job to start your own business, the standard requirement is that you need to own your business for at least 2 years to be considered.
Number two, you have the down payment and funds for closing costs, but they're in cash, or you make a lot of cash deposits in your bank account. The lender won't consider cash as an acceptable form of down payment, and large deposits need to be documented. Usually cash deposits are really hard to document and most likely won't be accepted.
Our number three, apply for new credit accounts or buy a new car after you've been pre-approved or during the loan process. Why is that bad? Well, if you have a high debt to income ratios, adding another monthly payment can definitely take you over the edge and disqualify you.
Number four, you don't make your payments on time or you don't make them at all. This will definitely damage your credit and your chances to get a loan will be very slim. In other words, if your credit shows a history of derogatory credit, the lender will assume that you might default on your loan as well.
Number five, co-sign for someone else on a loan. And this one can be a little tricky. If you co-sign for someone else and they don't make their payments on time, that will definitely affect your credit and could also affect your debt to income ratios when you try to get your own loan. There are some cases that we are able to document that someone else has been making the payments for that particular loan for the past 12 months, and we are able to omit the payment. But it's always a good idea to avoid being a co-signer. You don't want to take chances with your credit. Now, if you do any of these, you will lessen your chances of getting a home loan. Do all five and most likely you'll be renting for a while. I know it's harsh, but we just have to be honest. But if you simply avoid each of these, you have a pretty good chance to qualify for a home loan that will put you in the house of your dreams, right?
You got it. And if you're in the process of looking for a house and you're unsure if you qualify, now's the time to contact us and let's get on the phone and figure it out. Please like and share this video with anyone you think might benefit from this information. Thank you.